Hello friends, I am Sayed Sadat, Assistant Professor of Commerce. How are you all? I hope all are fine. So friends, after a long time, I am going to discuss this because in the earlier videos I have promised you that we are going to discuss about tax. So in this video, we are going to discuss about income from other sources. So before going to commence our discussion, I request all of you, please more and more share this video to your friends who are in need of marks. So if you like my videos, comment, share and subscribe my channel, and don't forget to press the bell icon. So friends, in case of income tax, we have 5 heads. One is income from salary, income from house property, income from business and profession, income from capital gain, and income from other sources. So I have taken the 5th head, income from other sources, under income tax. So friends, you can expect this question for 10 marks. I'm talking about this BBA Bcom students. They can expect this question for 10 marks in the exam. See, in many of the times students are going to fail just because of 1 or 2 marks. Here you are getting 10 marks. Again, this income from other sources will be useful to this Mcom, MBA, CA, CS students as well. So friends, what is this income from other source? ये income from other source income tax में क्या है? See, very simple meaning, the income which does not come under 4 heads of income, that is income from salary, house property, business and profession, capital gain, that income you are going to treat under the head income from other sources. This is the last head of income under income tax. Examples of income from other source: agricultural income in India, agricultural income in outside the country, dividend received, interest received, ground rent received. These are the what examples. See friends, here I'm not going to take the questions. I'm going to discuss 15 to 20 points which will fetch you 10 out of 10 in your exams. So हम इधर 15 से 20 पॉइंट डिस्कस करने जा रहे हैं. ये 15-20 पॉइंट्स आपको ज़रूर 10 मार्क्स दिलाएंगे. सबसे पहला पॉइंट फ्रेंड्स, साइमल्टेनियसली आप लोग एक नोटबुक लेकर इस सारे चीज़ों को एक तरफ नोट कर लीजिए. सो फर्स्ट पॉइंट इज agricultural income in India. First point out of 20 points, first point is agricultural income in India. Any agricultural income in India is exempted. This point will be there in your exam. Any agricultural income within India is exempted under the head income from other sources. To write the answer for this, you must know the places or the names of what districts in India. For example, agricultural income in Mysore, agricultural income in Bangalore, agricultural income in Mumbai, agricultural income in Himachal Pradesh, agricultural income from Uttar Pradesh, agricultural income in Mewat. Where is it? In Mewat? It is in Haryana. You must know, you must be having what this awareness about the places within India. So any income within India related to agriculture, it is exempted. I hope first point is clear. Any agricultural income is exempted if it is in India. Second point, second point, second point, again same, agricultural income from outside India. Second point, agricultural income from outside India. So any agricultural income from the foreign countries is fully taxable. For example, agricultural income from Bangladesh, agricultural income from USA, agricultural income from Russia, agricultural income from Ukraine. So any income related to what agriculture in nature, if it is outside India, then it is taxable. 2 points over. Next point, next point, dividend. Dividend from Indian company. See, in the question they have given dividend from Indian company, dividend from foreign company. I mean, dividend from Indian company or dividend from domestic company, dividend from equity shares, dividend from preference shares. Need not to worry, it is taxable. Earlier, dividend was exempted, now it is taxable. Many of the students, by seeing the old videos or by seeing the old what textbook, they have not updated with the assessment year. We are in the assessment year 23-24. It is taxable. Any dividend from Indian company, domestic company, it is taxable. 3 points over. Fourth point, dividend from dividends from foreign company. Any dividend from foreign company, again it is also fully taxable, need not to worry. Then the next point, dividend from dividend from dividend from cooperative society. Dividend from cooperative society. So any dividend from cooperative society, it is also fully taxable. So dividend from Indian company, domestic company, foreign company, or from this cooperative society, it is fully taxable, need not to worry. So have a look, we have already covered this 5 points. Next point, point number 6, ground rent received. Ground rent received or rent received from any land or open plot, it is taxable under the head income from other source. Suppose in the exam, if there is a point ground rent received, or if there is a point rent received from the open land or open plot, then it is fully taxable. Then next point, which is very much important, is director's fees. Any director fees, it is a part of income from other source and it is fully taxable under the head income from other source. Next point next point next point will take this will take this salary of MP. Next point is salary of MP. MP means what? Member of Parliament. See, if they are having any salary, then it is taxable. Daily allowances of MP. If If the government is giving some allowances to the MP, then it is exempted under section 10. It is exempted. Salary is taxable, daily allowances is exempted. Most important point. Next point. Next point is winning from horse race. See, winning from horse race, winning from lotteries, winning from crossword puzzle games, winning from the TV shows, every casual income, it is taxable under the head income from other sources. I'll repeat again: winning from lottery, horse race, crossword puzzle games, winning from TV shows example, the best example is Big Boss. If you are winning from Big Boss, then it is income from other source. See, coming to this winnings, coming to this winnings, one of the most important adjustment here in winnings, they are going to give they are going to give winning from horse race. They are going to give winning from horse race. In the bracket, they are going to give gross. Winning from horse race, gross rupees 1 lakh. If the word gross is there, need not to worry. Whatever the amount they have given, take that to the what table or write it is as what fully taxable. So gross means need not to worry. Suppose winning from lottery, horse race, crossword puzzle games, they have not given gross, they have given net. They have given what? They have given net. They have given net. Now here, this point is very important. It will be there in the exam. If they have given net, what I have to do? For example, they have given 70,000 rupees. Winning from horse race, net 70,000 rupees. Gross, need not to worry. Net, if they have given net, you have to convert this net amount to gross amount. If they have given net amount, you have to convert that net amount to gross amount. The process of converting this net amount to gross amount is known as gross up. So directly you cannot write this 70,000 as taxable. You have to do gross up. Sir, why I have to do gross up? Why they have given net? Net means what? Net means some portion of amount or some percentage of amount has been deducted from this. So whatever the 70,000 is there, it is not the real amount. It is after the deduction. See, whenever you are winning from any casual game, whether it is from horse race, crossword puzzle games, lotteries, you are not going to have full prize amount. They are going to deduct 30% tax TDS. How many percent? 30% tax they are going to deduct. Then they are going to give the balance amount. For example, you have won 1 lakh rupees from horse race, but they have given how much? 70,000. To arrive at the gross up amount, very simple. What you have to do means whatever the amount they have given in the question, 70,000 divided by 100 minus tax, into, for how much percentage we are converting this to 100%. So 70,000 in the question, 100 minus tax. What is the tax rate for casual income? TDS rate 30%. It is 30%. So 100 minus 30, 70. If 70,000 is for 70%, then how much for 100%? If 70,000 is for 70%, then how much for 100%? It will come to rupees 1 lakh. This point will be there in the exam. This is what the gross up amount. If net they have given not 70,000, you have to write 1 lakh rupees. So this is the most important adjustment in income from other source. I hope it is understood. If you want me to repeat, I'll repeat again. If they have given net, very simple. Whatever the amount they have given, write that divided by 70 into 100, you are going to get the amount. Next, next is, next point is income from sublet out house. Say income from sublet out house, rupees 1 lakh. Income from sublet out house, rupees 1 lakh. Rent payable to the above house, rupees 20,000. Income from sublet out house 1 lakh. Rent payable to the above house, rupees 20,000. Again, this is also very important adjustment. It will be there again in the exam. So what is this sublet out? What is this sublet out? See, sublet out means, let out means what? You have given your house for rent. For example, what I'll do, I have one house in which I have occupied. See, one of my neighbor, they are going to settle there in what, the foreign country. They came to me and they requested, Syed, see, we have this house, it is vacant. So please let me know if any tenant wants this. So I'll think what I'll do. I'm going to ask how much rent per annum I have to give. They're going to say per annum you have to give 1 lakh rupees rent. So I'll say okay, fine, I'll take your home for rent by giving 1 lakh rupees. Then after that, what I'll do, I'll see that many of the students are in need of this house as what, the PG. So many of the students who are coming from the far places or from other states, they want this house for rent. So what I'll do business here. I have taken house, my neighbor's house, by paying 1 lakh rupees as rent per annum. So I'll give this house to students for the rent of rupees 2 lakh. How much I am receiving from the students? 2 lakh I am receiving. How much I have to give to the owner? 1 lakh. 2 lakh minus 1 lakh, balance is how much? 1 lakh. This 1 lakh is taxable. So in the question, income from sublet out house, they have given 1 lakh. I have given the house to someone else and I am earning 1 lakh rupees. But rent payable to the above house, to the original owner, I have to give the rent of rupees 20,000. 1 lakh minus 20, balance is 80,000. So I have to give 80,000. I mean, this 80,000 is taxable under the head income from other sources. I hope this point is clear. Next point, next point, next point. Next point, share of income from HUF, Hindu undivided family. See, if you have received any income from HUF, It is exempted under section 10 under the head income from other source. Next point, share of income from the partnership firm. If the partners, they are going to receive their profit from the partnership firm, again it is also exempted under section 10 under the head income from other source. Next, any royalty received, it is taxable. Royalty received is taxable. Then after that, see, one of the most important point, adjustment or concept under the head income from other sources, securities. Securities. In securities, we have two types. One is government security. One is government security. One more is non-government security. One is government security, one more is non-government security. Again, in this government security, we have tax-free government security, we have tax-free government securities. Then here we have less tax government securities. Here again same will be repeated. Tax-free commercial non-government security, less tax. So this concept you have to understand. One or two points will be there for 10 marks. Securities, government security, non-government security. Government security, tax-free government security, less tax government security. Non-government security or commercial securities, tax-free commercial securities, less tax commercial securities. Coming to this tax-free government securities, these tax-free government securities are exempted. It is exempted. Coming to this less tax government security, it is taxable, but you are not supposed to do TDS. There is no TDS here. Less tax government security taxable, but there is no TDS. Here it is exempted. If it is exempted, no question of TDS. Then then non-government security or commercial security, tax-free debentures, tax-free securities. If the word tax-free is there, compulsory you have to do what? Gross up. Compulsory you have to do gross up. For example, in the question they have given, tax-free debentures of rupees 1 lakh, tax-free debentures of rupees 1 lakh, then what you have to do? See, for securities, what is the return? For securities, what is the return? Interest is the return. For securities, interest is the return. So, tax-free securities, commercial security I am talking, tax-free commercial security, rupees 1 lakh. So you have to do, first point it is taxable. First point it is taxable. Second point you have to do, you have to give TDS. It is taxable. There will be TDS. If there is a TDS, you have to do gross up. In the question they have given tax free debentures 1 lakh. Very simple. What you have to do? 1 lakh divided by 100 minus tax into 100. 100 minus tax into 100. Here again 1 lakh. What is the tax rate or TDS rate on securities or interest? What is the tax rate, or I mean what is the TDS rate on securities? 10%. So 1 lakh divided by 100 minus 10 into 100. So 1 lakh divided by 90 into 100. 1 lakh divided by 90 into 100. Then whatever the answer it will come, that is taxable under the head income from other sources. For example, if I want to say answer here only, what we'll do, I'll take this as 90,000. I'll make this as 90,000. 90,000 divided by 90 into 100, answer is 1 lakh. So Answer is 1 lakh. Most important adjustment. If they have given tax free, then you have to do gross up. Whatever the amount they are going to give, divided by 90 into 100. This is about tax free. Coming to less tax. What if less tax? See, less tax, it is, first point, it is taxable. Second point, you have to do TDS only if interest received is given. Less tax security, taxable. You have to do gross up. You have to do this type of things only when interest received is given. For example, only interest is given, percentage of interest is given, need not to worry. So this is about interest on securities. Then the last point is interest from POSB account, interest from post office savings bank account. So any interest received from post office savings bank account, what you have to do? One of the most important adjustment here. For example, interest from post office savings bank account, rupees 13,500 they have given. How much they have given? 13,500. But it is not fully taxable. It is not fully taxable. Up to rupees 3,500 is exempted. Up to 3,500 is exempted. So 13,500 minus 3,500, what is the balance? 10,000 is taxable under the head income from other source. So friends, any interest received from the post office savings bank account up to 3,500 is exempted, balance is taxable. Then one more point here, if they have given collection charges to receive interest, any collection charges to receive interest, it is deductible. For example, they have given interest on government securities, rupees 10,500. Next point they have given collection charges. Interest on government securities 10,500, collection charges rupees 500. 10,000 minus 500, 10,000 is taxable under the head income from other sources. So these are the few points which will help you to secure 10 out of 10 in the exam. I hope this information is very much useful. So please, if you definitely think that this information is useful to you, share and comment and subscribe my channel, and don't forget to press the bell icon. In the coming days or in the next class, we'll discuss the next question which will be there for the exam for 10 or 15 marks, that too in the income tax. Thank you.